Good morning, everyone. 7:32 Arizona time, 9:32 Eastern time. Markets opened a couple minutes ago. Um, if you read or if you listen to my AM Espresso, Trader's Espresso, basically gave you the big picture. The Dow is down. So here's what's happening. In the cash markets, Dow is down, NDX and Composite are up. S&P's down, barely down. It's down 0.13. It looks like that's firming up. And the Russell is up. VIX is down. The dollar index is down on the wake of, this is all after the economic data that came out, which is jobless claims, came in better than expected. My expectation would have been that would have caused the dollar to rally and equities to take a hit because of fears about an overheating economy leading to the Fed taking a more hawkish stance. So as it stands right now, from what I'm going to do with my portfolio, I am still reeling from losses yesterday about an unexpected news about Win, which is helping me a little bit today. Win is down 82 cents. It's down. Don't do me any favors. So I'm just going to keep an eye on that. Emerging markets, that number is probably just a dislocation in pricing because the VWO was actually up today. So I would expect that to correct itself as the morning goes on. If the NASDAQ is to continue to rally, which it is right now, equities markets in the futures markets on the indexes were rallying this morning despite the jobless numbers that came out. They just kind of shrugged that off. The Twitter numbers, the fact that Twitter posted its first ever net profit, obviously it's bullish for that stock. That stock has just climbed very sharply, prior to the market open, and it's continuing to do so. It's up around 35. I think yesterday's close was somewhere in the 20s. Yesterday's close was 26.92. So it's up 28% today. So that's obviously very good for Twitter. You'd expect it to be good for tech issues in general. Apple's up 70 cents. Autodesk is up. No, Autodesk is down 61 cents. So it's not participating along with everything else. So really it's going to be just trying to predict what as these equities markets try to find their footing, how is this all going to shake out? That's what I'm trying to figure out along with everybody else. So I got to look at Win, figure out what I think Win's going to do. What I really need is for Win to come down. I'm kind of hoping, once this chart draws, and I know hope is not a strategy, but I'll be honest, I'm hoping, and I think there's a chance this could happen. Of Win filling the gap. Now, when Win dropped on the 26th, when the news came out, it gapped down again the next day, so it created this small gap between these two bars here. Okay, Win has since filled that gap, so that's done. Then in the afternoon on the 6th, the news came out that Steve Wynn was stepping down as CEO and chairman. That was bullish for the stock, and it gapped up the next day. So this pink bar here, this area here, represents the gap fill that I would expect to happen. Doesn't mean it has to happen, but markets generally, when there's a gap, they generally trade back to fill that gap before they resume higher. In this case, it's a gap to the upside. Again, doesn't mean it has to happen. It's one of those things that if I'm going to hold on to Win, though I kind of need it to happen before tomorrow, because tomorrow, is is options expiry, and I, for whatever reason, chose to buy February 16 options. And right now, I would say that at least today, like ideally, I'd like to cover this position by the end of the day. And the way the price action is shaping up on Win, I think I might get that chance. I don't know. Like, just because the technicals are telling me this, painting this bearish picture, I don't want to bank on that continuing tomorrow. Who knows what could happen tomorrow? You know, Jerome Powell could come out saying I wouldn't raise rates for the rest of the year, kind of thing. The markets would love that, and it could be a sharp rally. So in these markets, given how event and news driven everything is, holding something overnight can be problematic for a trade. All right. If something's an investment and you have a longer time horizon, that's obviously a different story. So positive, barely positive Apple, barely positive Autodesk. You know, VWO once that prices properly. So this loss has been cut. I don't think it's going to make sense to sell calls against the VWO just yet. Once the market finds its footing, I think it's going to rally back up to the upside. That's my honest prognosis right now. I don't know if I want to take a look at maybe taking a nibble at Twitter. I might put that on my radar for early next week. We'll see. You know, I don't know if there's any pin action like Facebook or Snap. I mean, Snap reported pretty solid earnings yesterday. Facebook right now is down 20 bips. So looking at the technicals, I mean, this is not a good picture for Facebook. So if you want to be contrarian, which, I mean, taking a look at those technicals and saying, yeah, Facebook is a short wouldn't necessarily be contrarian. When I say contrarian, what I'm talking about is, you know, this irrational exuberance in the market, to me, just does not make sense. So the area to watch is going to be right here. This is you're either going to be able to play this for a bounce or play it for a breakdown. The technicals seem to indicate a trade through the bottom of this channel and a breakdown is the higher odds development. course, if we're going to draw this, I think the stronger view is going to be this weekly view. Which would tell you that actually Facebook is near the top of this midpoint of the channel. You can see that, look, going back to the daily chart, it's been kind of hugging this midline, this midpoint right here. It hasn't really been trading on either side of the channel, which, you know, stocks tend to do. When you have a wide channel like this, you break it up into two pieces, and it's usually, you know, you're trading. If you're in the upper band, you trade here until something causes you to trade down, and then you stay there. Facebook has just been kind of hugging this midpoint here. Since the midpoint is not as strong as the boundaries, you know, what that tells me is that this is a play to the downside. Technicals are, or what the technicals are telling you is this bearish view. And I think the bearish view on Facebook is coming from the fact that the market is still skeptical about what Zuckerberg and his team came out with when they on their earnings call last week. You know, the whole, like, this fake news, and, you know, Facebook is going to have to, you know, we're going to have to change our the way that we handle news feeds to get back to what our original purpose was, which was not to, you know, sell advertising, which, I mean, that's what they do, but, you know, which was to allow people to connect with friends and family. So I've heard talk about maybe splitting up news feeds to where, like, you have a news feed, which is news, a news feed, which is what's going on with your friends and family. So I think Facebook represents, to me, an interesting short. You know, another idea I had, just, I mean, Facebook, Twitter is a pairs trade. You know, plotting Twitter and its correlation to Facebook. You know, we're seeing a breakdown in correlation. That when you see a breakdown in correlation like that, that's a potential pairs trade. So basically, what you're saying is Twitter's relative strength compared to Facebook. So if your belief is that Twitter is demonstrating relative strength relative to Facebook, then some kind of a pairs trade where you're long Twitter and short Facebook. So for me, that would be, you know, buying calls in Twitter and buying puts in Facebook. And as that correlation continues to break down, you would profit. So even if Facebook goes up and hurts your put, you're hoping that Twitter goes up by a greater degree, and it's still, like, overall, you're still profitable. And so what we're seeing here is if we plot Twitter minus Facebook, it's kind of like a Forex pair, right? Where the first symbol mentioned, that's, if that goes up, then you see it a bearish chart. So what we're seeing here is a bullish channel. Like Facebook has been doing strong relative to Twitter over most of this price channel, but Facebook has, or Twitter rather, has been showing some strength recently, and that's probably more of just Facebook's weakness, to where now it's broken up out of that channel. You know, I think that's a good trade. And that's one that, in my opinion, isn't dependent upon what happens when these markets finally find their footing. I could be wrong about that, but it just, I get that. I think that it doesn't matter whether the markets take a turn for the worse or take a turn for the better. What we're talking about is the relative strength of two different components of the NASDAQ composite. So that's a trade I'm going to put on today. I need to figure out what's going on with Autodesk, because it is not participating in this rally. Give that chart some time to redraw. I don't know if the hamster's tired or something. I don't know. Haven't been feeding them. Okay. Autodesk. Coming off of the lows of today. So I'm not sure why this was a gap down. Unless there's some news that I missed. Which, that's always possible. No, nothing dated today. So I don't know what that's all about. Looking like it's going to improve. I mean, these go out to March. So I've got time to decide what to do with this. If I think it's going to continue to be soft, I can sell calls against it, offset some of that loss in the position. You know, the net loss I'm sitting on a net loss for Autodesk anyway. Go back to futures. So this is what we missed, what I missed, wasn't paying attention to. Kind of some initial weakness. Looks like I actually turned negative here for a bit. And the picture is a mixed one. Across time frames, bullish, bullish, bearish, bearish. I guess when I click on the 4-hour, I really meant to click on the 30-minute. Bearish. So I'll tell you what that tells me. That tells me it's going to make sense to sell calls against Autodesk because it already has proclivities to the downside. You know, the strength in Apple may be short-lived. I don't mind if I eat my breakfast. S&P futures. As you might expect, showing the same kind of picture as the NASDAQ. If I look at the RTY, it's probably also going to be showing us that same story. RTY is a bit, well, across time frames, RTY is a bit different. Bearish, bullish, bearish, bullish. Versus on the NASDAQ and the S&P in the 15 and 1 hour time frame both, and then the 4-hour. Was not painting a great picture. This confirms, I've been saying for a few days now that I think the Russell is the index that is finding its bottom and it's going to lead us out of this time of turmoil. If I remember to do this, I'll show you the chart. I may have gone over this chart with you already. And the other one that's been acting strange is the Dow. Although this view is very similar to what we just saw with the NASDAQ and the S&P. So really what is shaping up is the Russell is kind of the outlier. It's the one that is showing relative strength compared to the other major indices. It is, and the reason for that, I believe, is that the Russell is the only one that didn't get irrationally exuberant. It didn't break up out of its channel the way that the other ones did. And you would have expected it to do so because, you know, after tax reform was passed, you know, the conventional wisdom was tax reform was going to be great for small businesses, for smaller companies. Now, having said that, you have to think about if tax reform is going to be good for small businesses, which it would be. But the overall concern with the economy in general is that the economy is going to overheat. The Fed's going to take a more hawkish stance. It's going to unwind its balance sheet more quickly, which is going to be bullish on rates, as well as taking a more hawkish policy stance, which will also be bullish on rates. If rates get too high, that's going to derail the stock market rally. That's the conventional wisdom. That's what caused the market to take a tumble on Friday, caused it to take a tumble, even bigger tumble on Monday. That component would be bearish for small businesses, because if you think about it, they're helped by tax reform, but they're going to be hurt by higher rates because borrowing costs for them are going to be higher. So how does that balance out? That's the real question. That, at least the way the market is answering it right now, is that the tax impact that's a tempering factor for small businesses. The positive impact of tax reform is going to outweigh the negative impact of higher borrowing costs. So on that note, I'm going to take a quick break, refill my coffee. I'll be right back. I'm going to leave the stream going, so I'll leave you with this view of what the Dow futures are doing. Okay, I'm back. Oh, I'm not back because I didn't grab my coffee. Hold on. Okay, now I'm back for real. I'm seeing the setup here in the Dow that I want to take. And isn't that always the way? Damn it. It just ripped against me as soon as I hit that. And really, I mean, here's what happened was I neglected to consider the fact that the full D is making its way upwards. So that was not yet. All right, Tim, lesson learned. So the good news is Win is up on the day. My position's up on the day because Win's down 264. Like I said, I think that's going to continue. So right now, it's a chance to reverse these losses on the Dow. Markets are still, these futures are still very, choppy is not the word I want to use, because I use choppy to describe when markets are trading, when they're trading in a very tight range and they just turn against you, move a little bit and then turn the other way. That's choppy. Volatile is more like they're making big moves on high volume, and they are reversing direction a lot. I mean, I'm not saying that they're not. Bravo. Beautiful. Okay, so reverse that loss. Could have stayed in. Actually, it's good. Well, it's actually good that I got out because it's looking like it's gonna. It's gonna hit its head against this. That would have been, that might have been a better place to get out, but it's not. It hasn't hit there yet. I don't know if it's going to because it's kind of reversing against us right now. Not against us because we're not in it, but that's the point. VWO is basically flat on the day. I don't know what that's all about. Oops. So I just caught out of the corner of my eye what's going on in the cash markets. Red across the board. The futures are still shiny and happy, except for the Dow futures. But in the cash markets, the Dow is down 148, the Index is down 12, the Composite's down 14, the SPX is down 9, the Russell's down 2.7. In the futures markets, the Dow futures are down 32, but the Nasdaq 100 futures are up 12, the S&P is up 2.5, the Russell's up 5.5. VIX is down 7%. VIX futures are up 28 basis points. The Dixie is down, the dollar index is down 3 basis points. Gold's up barely. Crude's down 0.7%. And the 10-year note is down. The futures on the 10-year note are down 36 basis points. So I don't know if this is the jobless claims finally weighing on the market. See, here, this is interesting. Neil Kashkari. So whenever the Fed speaks, representatives of the Fed, sometimes I wish they would just keep their mouths shut. It says, Wall Street set for rebound amid earnings deluge. That isn't happening. Philadelphia Fed President Patrick Harker says tax reform to increase GDP by approximately 0.2%. Doesn't sound like a lot. So I think that would allay concerns about an overheating market. Neil Kashkari, Fed is a long way from having to raise rates to offset inflationary pressure from higher wages. So you would expect that to be bullish on the markets. It's not. That news piece just came out like a minute ago. So we are in a time of an environment where the futures are marching to the beat of their own drummer because they're more forward-looking than markets are, or the cash markets are. And this is a recent development because the futures and their real index equivalents weren't moving in lockstep with each other. But for the last year or so, you could expect them to be going in the same direction, close to the same magnitude, maybe off by a little bit. And if you look at the 11 S&P indices, healthcare, or sorry, not health, well, healthcare too. Consumer staples is flat, but pretty much everything's red. Healthcare just turned positive. The energy is positive. Everything else is down. Financials are down considerably. Telecommunications down considerably. Information technologies flat. Real estate down. Utilities down. Materials, industrials, consumer discretionary. I had a chart I was looking at. I don't know. Keep it open. I was looking at the relative strength, the RSI indicator. An average true range. Looking for, one of the things that struck me was that some components of the some sectors that make up the S&P were refusing to touch oversold. Telecom was one of them. Information technology was one of them. I think healthcare and financials. Okay. So you can see that here with information technology. See here with financials, they're making a turn back towards that oversold. You know, same thing with healthcare. And consumer discretionary was another one. Okay. Energy is not playing that game. Materials are not playing that game. Although, I mean, they hit oversold, they bounced out, now they're turning back towards it. Industrials, consumer staples did not. Healthcare did, financials did, information technology did, telecom services did. Utilities did not. Utilities are still kind of bottoming out. And real estate. So I do not believe that this downward move has completed itself until those four sectors I just named fall down into oversold territory. Then we can say that the weaker hands have been shaken out of the market, and this market is shaping up for its rebound. Add to that the fact that if you look at just the indices overall, you know, Dow's still figuring out where it's going to bottom. SPX, is it going to cross the midline? I don't know. I think it's going to cross this midline and rotate down all the way down to the bottom part of to the bottom boundary in this channel. NASDAQ 100. You know, it's NASDAQ 100 and the NASDAQ refused to stay in their long-term price channel. So that's got to happen. You know, some of the air needs to be let out of this balloon. The Russell is the only one that rotated down to the bottom of its channel. It briefly touched oversold, as did the Dow, NASDAQ didn't. The NASDAQ 100 didn't. The NASDAQ Composite didn't. The SPX did briefly. So, but all equity indices are rotating down again. I mean, they gotta spend some time in that oversold territory. They're gonna have to spend some time below that threshold of 30. That's an RSI threshold. It's not the stochastics. Stochastics is 20 and 80. Some of the weaker longs got to be shaken out of the market. Look at this volume here. Compared to Wednesday's volume. This is Tuesday's volume where my cursor is right here. This is Monday's volume. This is Friday's volume. Friday's volume did not touch what we're seeing today. That was the 15-minute chart. Looking at the hour chart, it looks a little bit different. But volume early in the day, like volume early in the day today, is just about the same height as this bar here, which was like 1 o'clock in the afternoon. You know, this was the 7 o'clock hour this morning. And really most of that happened from 7:30 to 8, I'm sure. From a half-hour standpoint, the 1 o'clock bar, like these two bars early in the day, have more volume than the Dow futures had at 1 o'clock in the afternoon. And it closed on decelerating volume on Friday. See, and now the futures have turned negative, and the losses in the cash markets have widened. So the Dow's down 233, NDX is down 37, the Composite's down 40, the SPX is down 18, the RUT's down 7. Dow 100 or Dow futures down 114, Nasdaq futures down 11, S&P futures down 6.5. The Russell futures are still up 2.6. Volatility futures are now up 4.8%. VIX futures are still down, but are down off of up off their lows. The dollar index is up barely. Gold's up barely. Crude's down 45 bips. That's what you need to know. If we throw the Fibonacci up here, spend some time between the 23.6 and 38.2. So spend some time between 24,739, 24,423. So that's where we're going to be. Now, a 15-minute chart shows us that volume is decelerating. Also, if we look at this across time frames, okay, 1 minute, 4 minute time frames bottoming out, so we're going to see a rally. Maybe up to this 24, maybe up to this level here. But once that plays itself out, you still have downward pressure from a longer term. Look at the stochastics longer time frames. All sectors are down. So I'll leave you on that note. Sectors, where? Oh, they're public. That's why. S&P. Step away for just one brief moment. I'll be right back. As I was saying, all sectors are down, and losses appear to be widening. Apple in this tape is showing relative strength. Autodesk is showing some relative weakness, so I think that it's going to make sense to sell calls here pretty soon today. That level is a key level. It was support here. That's a little steep. But I don't see a reason why we couldn't expect to trade down that level by around March expiration. Now, whether I put on a put, like I buy a put or I sell a call spread, that's going to depend on the volatility. Is volatility going up or down? You know, it's probably going up. So if I'm going to model a trade, I'm going to model a trade buying a put. Maybe put my expiration out there a little bit because I don't want to be fighting time decay. So probably buy a put spread. If it trades down to 163, volatility being what it is today, I can make 227. If it goes against me and rebounds to, you know, let's say 193, That's about 1 to 1. You know, I like to do better than a 1 to 1. Of course, this is one where I'm going off of technicals, not events, so. And I'm looking out of the corner of my eye, the Dow futures just took a nice leg down. There's a little bit of a squeeze going on there. Tell you where I would get out if I'm wrong is 183, 182. Still not great. Volatility increases. $63, $200. So that's more like 3 to 1. That's better. That's at least better because volatility increasing helps me. And 7's not a big jump, really. I mean, the more it jumps, the better it is for me. Ugh. Good. Got filled at 394. So cash markets, now the Dow's down 380 and the futures down 250. So the sell-off continues, folks. Okay, I'm going to have that in the chamber ready to go. That sell that call. $45. VIX is up. The index now is up 2.7%. The VIX futures are up almost 10%. Dow's down 330, NDX down 83, Nasdaq Composite down 85, S&P down 29, RUT down almost 14. Futures also down, not by as wide a margin though. Dow futures down 215, NQ mini Nasdaq down 62, mini S&P down 60, or sorry 18.5, mini RUT down 4.6. Dollar index is down 4 basis points. Gold's up $3. Crude's down 44 cents. Futures on the 10-year note are down 17 basis points. Bulls are fighting this move down. Every day that goes by, the bulls lose a little bit more of their fight. That's what I think is happening. This move down, yes, is a buying opportunity. Be careful of dismissing it as, oh, this is just a buying opportunity. That's trying to make bad news good news. Yeah, it is. I'm not saying it's not. All I'm saying is it doesn't. I don't think it makes sense to be that sanguine about it. I think you're foolish if you think that this is like any of the other viable dips. It's not. And if you try to tell people that it is, I think you're doing them a disservice. Oh, this is the dip I've been waiting for. No, it's not. The dip you've been waiting for is still to come. See, that's what irritates. That's the stuff that irritates me to no end. Oh my god. See, it was just a matter of time before it broke. See, and each leg up is met by more selling pressure. You know that when you start hitting lower lows. See, we just hit lower. Now it's hitting lower lows. And that is not. This does not feel like a day where I really should wait for a leg up before I sell these calls, because it's just tremendous selling pressure. Seeing waiting cost me about 70 cents. Apple's bucking the trend. It's up I mean barely. It's up 5 cents. It's up a nickel. NASDAQ futures continuing to drift lower. I'm sure if I pulled up the other futures, we'd see the same story. Looks like a leg up, shaping. course, what you know, as soon as I say that, the selling pressure is just too tremendous. Like I really got to sell the calls against Autodesk. It was waiting for me to do that before it started rallying because it hears me. Of course, it also means that Apple's rallying. Well, anyway, 9:32. It's lunchtime on the East Coast, so I'm going to go ahead and cut the stream here. I'll be back in a couple hours, and we'll finish out the day together. So that's 1:30 Eastern Time.